Things are looking good indeed for European online auction site QXL.com. So good, in fact, that SG Cowen set a 2-year price target on the ADR at $1,000 per share. Today, a 3-for-1 stock split went into effect, making the actual target $333 per share. Well, in today's trading session, QXL.com shares finished up better than 29 points to 58 even. That's a gain of 104.5%. The Wall Street Journal's Steve Frank has more.
Never heard of QXL.com? You're not alone. Never heard of Thomas Bach? You're probably not alone either. But today, the analyst for the SG Cowen Investment Bank made a name for himself and for the European online auction company that Cowen recently helped take public by calling QXL the next eBay.
I truly believe that this is a big opportunity that QXL.com is facing, and the U.S. market has valued the leading online auctioneer, leading but not only one, at $25 billion in market cap. And we believe that because of the size of the market and the potential opportunity, QXL.com in 24 months could reach those levels.
That's right. Mr. Bach's analysis isn't based on QXL's current revenues or profits. It lost $17 million on $2.4 million of revenue in the latest quarter. And it isn't based on any sort of fundamental analysis of QXL's expected future revenues or profits either. Instead, it's based simply on his belief that QXL will become Europe's dominant online auctioneer, much like eBay is dominant in the U.S. And if eBay is worth $25 billion, then Mr. Bach believes QXL has got to be worth at least that much within 2 years. Working backwards, he calculates a market capitalization of $25 billion works out to $200 for each QXL share traded in London, or $1,000 for the company's American depository receipts, each of which accounts for 5 shares that trade in the U.S. The eye-popping target works out to a less eye-popping $333 per ADR after a 3-for-1 stock split that went into effect today. If the analysis was somewhat unorthodox, QXL executives weren't complaining.
It's a way of looking at it, and it seems to be it seems okay to me to look at it that way. I mean, eBay has a certain market cap, and if QXL or other companies could achieve the same stature and profitability that eBay has, then they should have relatively similar valuations.
Now, achieving eBay's market value and achieving its profitability may be two different things. In the latest quarter, eBay's gross profit margin was 70%, compared with just over 10% for QXL. And while Mr. Bach expects QXL's revenues will jump to $47 million by fiscal 2002, that's the same year he expects its market cap will hit $25 billion, he also expects it will lose $92 million in that year. That compares with profits of $11 million on revenues of $225 million at eBay last year. Sue?
Thank you very much, Steve Frank.